Hello guys, so welcome to the channel. So today we are going to be seeing how SMC actually plays a vital role in actually helping us advance our trading journey. And currently right now I'm on USDJPY and I'm going to be showing us how USDJPY actually played out, right? I'm going to start from the bottom here, moving to the top, and while I'm actually at the top around this area, that's where I'm really going to be more detailed, so we see how you can actually break down your analytical framework to actually see how to take a trade, right? So starting from the higher time frame, which is the daily, sometimes you get to the daily time frame just to be able to get market perspective, like the overall bias of the market. So I'll just start down here, so we get to see. But normally, when you get to the daily time frame, you just want to see that direction, probably from this side here. But I just want to start here for people that have not yet seen the strategy that much. So normally we have a break or structure origin. You can see that this is where the break or structure happened at this point here. And following that move, if you were to mark out the origin that gave out that break or structure, this is the origin where the markets came from. And if you look at it clearly, the market pulled back to it. We had pushback on it at this particular point. At this point here, you can see a lot of resistance. This week here is what had to clear all of these guys out, right? If we were to restructure it clearly, here is just a liquidity sweep. A lot of people were trying to take their buys from this particular area here, and the market had to clear them out. That's what actually happened here. So whenever you're working with smart money concept, you need to understand that um, before you enter a trade, make sure that liquidity has been taken out. Make sure you're not buying at the wrong position, because if you're buying at the wrong position, then the market makers will always have the tendency to take you out of the market before going in the original intended direction, right? So I'm not going to go in depth as to how you would have entered the trade here. I just want to show you how the break or structures and all these things actually play out. So I have a break or structure at this point. You can clearly see that there was a very big gap here at this particular point. The market did retrace to come to that, and we did push up, no problem. Equally did have another break or structure to the upside at this particular zone. And if you look clearly, you see from this other block here, this is where the market did react from to push to the upside. Following the next particular move, we did have another break or structure to the upside from here. That's why no matter how choppy the chart might look, when you actually know how to use the concept properly, you're going to understand that you'll find the means to actually understand the next move in a way. The main thing now might be your method of entry. We are going to be emphasizing that shortly. And if you look closely, this is where it did react from here though. If you those are on higher time frame, this might be small, but this is where the reaction came from. This wick here actually wicked into the origin that caused it, and then we pushed to the upside. Following that particular structure, it dished out this particular huge move, and if you step down to the 4-hour time frame to see clearly what was happening there, like that, you can see that we also did have a break of structure at this point, like this. If you were to map out the origin that caused that particular break of structure there, we realize that this is the break. You can see that this is the origin here that caused that. And you can see once the market pulled back into that point of interest or that origin area, then it did push to the upside. And now one of the challenges you're always going to face is that whenever you identify a break or structure to the upside, it's always going to be easy, right? And whenever you actually get that pushback, the problem is going to be, how then am I supposed to enter the trade? Like, how am I supposed to know the pullback has ended? Because it could get to this point and you think it's over, just for you to enter a position here and the market just takes you out on this other move right here, right? So how do you then know? That's why you need confirmation before you enter your positions, because if you actually get some good confluences before you make the move, then you're actually on a good footing, right? And one of the confirmatory processes I always try to observe at the point of interest, that's when the market pulls back to point of interest or origin, is to actually see to it that there's a change of character happening at this particular point. Because when that change of character happens, it's a confirmation that we are about to move to the upside. And when I say a change of character, what do I mean? If you look closely at what happened here on this particular time frame, you'll see that this was the last break of structure to the downside. So this is what you're supposed to be observant about. This is one of the confirmatory processes, because if you see that here we're pulling down the downside successively, right? And if you realize this was the last break, and when the market did pull back, it took away this high. So this was the last break to the downside, and this is the high that caused that break of structure here, like this. This is where the change of character actually happened. If you look closely, and once this change of character happened on this pullback here, this is where your entry is. This was a very good move to the upside. If you zoom into lower time frames, you will see that there's another change of character that literally took place here for you to actually get an entry on this particular move, right? So that's what actually took place. This is a confirmation you'll be waiting for most of the times on the smaller time frames to make a move. So now another thing I want to also notice that if you look closely, let's say at this particular point here, you realize that once we had the break of structure to the upside like this, if you're not a swing trader, this is the 4-hour time frame, waiting for this particular move to get to your point of interest here might take a very long time. So if you're a scalper, you can, with the understanding that when we have a break of structure, the market is always going to retrace to our point of interest. You can then go on the smaller time frames like the 15 minutes and 5 minutes there. So actually look for positions while the market is still around this zone here, pushing down to the downside, right? So you'll be taking some sales to the downside, having in mind that when the market gets to our point of interest, then we'll start looking for buys, okay? And also having in mind that as it's going down here, you don't want to see things like change of characters happening around this zone here, because most times the market will not necessarily get so low to your point of origin, right? Or your point of interest. So that's what you need to take note of, like that, okay? So having that in mind that we had this change of character here, as we can see clearly, then after having that change of character at that particular point here, we see the market did retrace, gave us that entry push to the upside as such. All right, that was a good one. And if you look closely, you're going to see that let's see, following the current structures that we have, you can see that we equally now have another break of structure here. I'm just going to go horizontally. You can see this is where the break of structure actually happened here, like this. Now, if you're trading, it does not mean you'll be following before the market got to this point here. These are all internal structures. It does not mean you're not going to be trading within this zone here. This is the external overall structure here, right? So this is the break of structure that happened. I'm just going to mark that as a break. But following these internal structures here, once this change of character happened and you entered around this zone to the upside, you realize that we equally also had another internal break of structure to the upside. Okay, this is the internal break of structure to the upside. And where is the origin that caused it? You can see clearly that this is the origin area here. We'll call this an area of demand, or your point of interest, or whatever you call it. So this is the same area that caused it. So looking at this particular area that caused it, if I'm to go into the smaller time frame, so you realize that, as I said, how do you then enter? How do you then know that this market is not going to continue going down? Do you just buy from here? Yes, there are times when you can just aggressively take an entry from here, like a stop limit order, to just go to this to the upside once the market does arrive at this particular area here. But what you need to know is, at least if you want to actually have more win rates and actually increase your winning rates, then you need to actually see that some confluences have been put together before you actually take your position, right? So if I step down to the lower time frame so that we can see what actually happened in here, where a change of character happened here before we actually had to make a move here to the upside. So if I step down to the 2-hour time frame, for instance, you can see clearly that at this particular point here, this is where we had this was the last break of structure to the downside at this point here, like this. We had that last break of structure there to the downside, and following that particular last break of structure that we had there, you see clearly that this is the origin that caused it. So a change of character happened at this point when this particular high was taken out, indicating that we are about to move to the upside, right? And once we had this change, you can see upon this retracement, this is the pullback you enter upon. And once you enter like this, you're definitely looking to take a definitely is a buy position, putting your stops below this particular low here, and then taking your TP mechanically. Most of the times 1:3. That's what I do prefer, like that. And you see the market always take you to the upside. So that was the current state definitely of the previous week and likes of that. So now this is the internal structure. So once the market then breaks this particular structure here, this is the current high, we can then see that we have this is the external structure now, right? So we can see that we have a break of structure here. And one thing that I need to understand now is that since we have a break of structure as usual, you know that once you have that break of structure, the market is always going to have a pullback. But the point now is the pullback, to what point is the pullback going to go? At what point is it going to stop? Are we just going to keep going down, or at what point is it going to start reversing to go up, right? Because this is one of the main challenges that you will face most of the times, to say that maybe you can be thinking, oh, we had a break of structure, maybe this is where my order block is going to be, because there's a good fair value gap here, you know, and likes of that. The market might come here and likes of that. So it's very plausible, as well as the market could be reacting from this particular zone here as well, this particular layer of demand, and just keep going up to the upside. So one of the ways I'm trying to propose, not necessarily propose, but one of the ways I'm trying to help you out is by trying to say that once you get this particular pull down to the downside, what you should be actually vigilant for, or what you should watch out for, is actually observing a change of character at any point along this origin line here that you think that might be a point of interest. So once you find that there is actually like a change of character around this zone, then you should be actually looking out for it, right? That's where you should start thinking that the market is about to push to the upside, and you start looking for your confluences to enter that particular trade, okay? And sometimes you don't want to be buying the market in a discount. Sometimes you want to actually be buying at a discount price, and you want to be selling at a premium price, and I'm going to show you what that means, I think I think by the end of this video. Okay, so now putting that aside, let's actually see what's actually taking place here. Okay, so if, without putting this particular order block here, if I should step down to the 1 hour time frame, since we had that break of structure, let's see what's actually taking place here. If you look closely, the moment we actually had this break of structure to the upside, we had been pushing up progressively until this particular pullback happened. We did a retracement, pull to the downside, showing that it's a downward push. Did a retracement, we did push again to the downside, then we pushed again to the downside here. And if you watch closely, let me step down again to the 30 minutes for you to see what was happening. Let me just mark out the structure so it becomes a little bit more visible. We had a break of structure here to the downside. This is the internal structure here. We equally did have another break of structure here to the downside. I think here there's another one like this. I'll just call that a break. And here as well, there's another one like this. I'll just call this is another break of structure to the downside. And if we look closely, this was the last one. All right, and this opened up to Monday. So this is the gap that actually opened up following the current opening of the week, of the trading week, right? So this was the last break. So if you look clearly, this is actually the origin that caused that particular break of structure to the downside, and you can see that it's taken away at this point here. And this is when you see that this origin is taken away, this is a change of character here, right? And once you have this change here, definitely you know there's always going to be that pullback that is going to happen, and this is where you should have been waiting for the markets to come, at this particular area here, right? This is the main area here where you should have been waiting for the markets to get to. This last candle here should have given your order block. There's a fair value gap available there. You can see clearly that liquidity was already been taken out from the market. These are people that have been trying to buy at the wrong time like this. You don't want to be buying like this when you're not yet that sure of if the market has made you understand we're about to go up, because this change of character here, once the market cleared out this structure to the upside, then you know that okay, we're about to start going in that upward direction. You then wait for that pullback, and then you enter the position on the pullback going to the upside. So this particular layer here will just simply liquidity that the market has to clear out before then getting into your position, where you're going to now be looking for a position here. If you're even aggressive on this one, no problem, but I don't always, when you can enter directly on a change of character. If you just a break of structure, wait for a change of character here. This is the confirmation that we're waiting for to enter based on this higher external structure here, this external break of structure. This is the confirmation that we are waiting for to enter. That's why when it retraces like this, we can immediately just take a particular entry at this particular point here. Let me refine it for so that it becomes clear. As such, see, so we can actually make that move here, actually putting your stops just below this particular entry point and mechanically targeting 1:3 like that. So this was the position which I'm currently in. This particular position I entered yesterday, and this is one of the moves you need to actually be looking out for. So this is how you actually simplify your trading, and you need to understand that as long as, let me step up to the 2-hour time frame for instance, and what you equally need to understand that we are currently in an upward trend, and as long as the market remains within this particular zone here and it remains equally within this other zone here like this, let me take that out, and it remains within this zone here, then we are in an uptrend. Okay, that's not, if the market then comes below and clears out this particular layer here, then definitely we are in, the market is about to shift, so we change bias knowing that we are going to the downside. Likewise, if we realize that it clears, we continue moving to that upside, right? So that's one thing you're supposed to understand about this. So if you're not yet subscribed to the channel, don't forget to smash the like button, and for more content like this, we are going to be uploading to actually show you how you can be able to scale up your own trading journey just by being consistent and actually following this. The steps could look boring, but this repetitive acts that you do several times that actually builds that particular structure you need. Right, so see you guys in the next video.